Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the red in the charts. As you can see, the stock market is holding pretty steady and just making its decision about whether it would like to go up or down. But overall, the crypto market has just been down, driven by negative news. This is how I left the assessment 2 days ago, if you did see that episode. That we're not even going to be neutral in my eyes. We're not going to even have a hint or a flavor of bullishness, and so just be careful, Alpha fam. That was your Alpha for the day. Stay. As you can see, I was pretty bearish. We were underneath the momentum pools for those 3 days, and just persisting underneath the momentum pools. We did lose all of our momentum, and just fell basically to the downside. As you can see, this is the catastrophic dump that was before us, and again, just using volatility, momentum, and price action, I was able to give the Alpha Fam a 2 day heads up on that. We do see that we do have an updated formation because of how this thing has just dropped like a lead balloon, and that new formation is essentially a distribution wedge, which is now in danger of distributing to the downside and fulfilling its name essentially, where the smart money basically just gets rid of their assets and then it breaks down to the next level. We did have a bearish retest of this distribution triangle, and so unless we get a nice pump, this isn't going to change. We could have a fake out where sometimes just these market makers, they'll drive the price down here and then quickly bounce it up in order to essentially liquidate all the short positions, and then they'll bring it up here, grab some liquidity, and pardon me, and liquidate all of the long positions, and then eventually drive it back down, fueled by all of that liquidity. And what that would amount to is perhaps the energy that we would need to push down to 14,000 or perhaps even 11,000 based upon that flagpole for this bearish pennant. And also, of course, we have the measured move for the distribution wedge itself. So those are two targets that I do have in mind, approximately 14,000, approximately 11,000. And, we do have to be on high alert for that. Now, what's the likelihood of us just dropping straight down? I think that there is the potential for that. However, based upon volatility, the 4 hour is going into a contraction phase, and also the daily is still contracting to the downside. So that does suggest, in my mind, some potential just a consolidation. In other words, we could even see a pop up, but I'm just not 100% committed to that idea. I was talking with some people about the fact that we did have a bit of a inverted head and shoulders here. That seems to have been invalidated, but this thing just continues to create patterns that look like they want to push up. And so if we do get a pop-up to the CME gap here around that 16,225 to 16,370 area, that would fill the gap. And it would also put us within striking range of just getting outside of this diagonal, which then we could use to pop up here. And again, just grab that liquidity up in this area and then perhaps later smash things down. Now, we do have our updated momentum pools. The momentum pools, you can see that we've just been drowning in them, or we've been essentially just dead at the bottom of the pool, just buried underneath the pool. And well, did we just get a spike up right there? Yeah, I don't know. But we did just basically attempt to get back into the alpha momentum pool there, just like we did over here at the start of the day. We really need to get solidly inside of it and try to swim around in order to grab some momentum, which then could thrust us to the upside. I did make an outline for us in order to see in order to measure where we are. And you can see that we will be solidly bearish underneath 15,760. We will lose all of our momentum underneath 15,468 and probably pass down to the next level. We will be essentially neutral at 16,365, where it's going to be kind of a coin toss which direction we could go. And I don't really expect us to have any significant bullishness in our outlook unless we're above 17,041, and pretty conservatively at 17,810. And then for some type of a macro bullishness, we really do need to capture 19,711 for potential squeezes to the upside. But as for right now, we are just struggling to even hold on to the bottom of this momentum pool. We could perhaps be flipping it right now as I speak, after having lost it earlier in the evening. But the next boss to win over is going to be approximately 15,850, which is going to be a pretty significant line for this distribution wedge. And then, of course, that $16,005, which will just be our next momentum level that could potentially get us up to that CME gap. So you can soak, that all up and, do with it what you will. But I did want to give an update so that if you are able to watch this episode in the early morning before perhaps stocks open up, or just before the day closes today, then at least you have some reference of where we could be. Now, this pool is continuing to just to spill over. The momentum is just getting lower and lower. We're starting to stretch down. Potentially, we could have just a catastrophic fall here if we're not able to capture this one. But you can see that the 2 to 5 day projection does suggest that if we're able to capture the daily today, and we're about halfway done with a Bitcoin's day. But if we're able to actually capture this by the end of the day, then there's a good chance that in the 2 to 5 day projection that we could have a thrust up to this bullish area. Now, if this is just going to be a fake out to the upside, then I wouldn't expect us to really get over 17,000, or perhaps just a wick up to 17,800 quickly with a pullback. Even they could do that a couple times and just like grab liquidity before bringing us back down. But I would really want to see 4-hour candles really establishing themselves up above 17,000 and preferably above 17,800 in order to have that kind of a bullish turnaround perspective, or at least to have enough energy to drive us up to the $19,000 range. We're just not there yet, and I do believe that we're more in danger of falling down to 14,000 than we are of capturing 19,000. With, of course, that extended move down to that, let's just say, 10,000 to a $12,000 range. That's going to be your alpha for the day. Stay safe. Happy trading.